All right, guys, what's happening? Look, I don't normally ask for things. I don't like asking for things, but as far as I know, the only way to get the metal gold-plated Robinhood card with 3% cash back is by referrals. So if you're one of the 10 referrals, that'd be amazing. I'm going to leave a link in the description, maybe in the comment. So click that, sign up, and yeah, help me get that dream, the gold-plated card, okay? Please. Okay, so this video is going to be about Robinhood. I did listen to the conference call. I thought it was pretty cool. Vlad gave a shout out to all the YouTube analysts out there, so that's awesome. Right at the end of the call. So one thing that I've noticed is that the company is shifting a little bit. It used to be a play where it was comprised mostly of cash. It used to have a ton of cash, more than the market cap of the company, which made it a really, really simple, easy way to sell puts. Now I'm still doing that. Actually, the company still has about 6 billion in cash. They've spent some of it, of course, in growing the company in places like the UK and EU, the United Kingdom and the European Union, or Europe. They've opened up stock trading in United Kingdom, and they've opened up crypto trading in Europe, and I think they're trying to do both in both places. So we'll see how that goes. I wish them success. They have started to burn a little bit through their cash pile. Now, their revenues, all right, their revenues have actually increased quite a bit. And on the earnings call, it seems like the 682 million revenue per quarter is probably going to be sustainable. They said that in August, they're seeing already some strong demand for their products in Europe. So that's going to help quite a bit. Their user growth is growing. Their margin is, users are growing. Like everything is actually just firing on all cylinders. And it looks like the company's going to have another great quarter. I take it as good forward guidance, honestly, in a subtle way. So hopefully that does persist. Their earnings are, of course, positive. They had a record-breaking earnings quarter. Their operating income is up. Everything is basically up and good. They are selling some shares, however, not really that much. Their outstanding shares have just ticked up a little bit by maybe like 9 million or so. It's not really that substantial. They're trying to probably preserve some of their cash pile. And in fact, if I was them, I would probably look to even sell more shares at this particular period while the stock is a little bit elevated in order to get that, take a page out of GME's book and get that cash pile even higher. So they're super like recession proof and super downturn proof. And the company becomes something that will just never falter, or at least not go bankrupt in really, really tough times, even if we have another 2008 type of scenario. So I think I'd be in favor of them selling even more cash right here and just focusing that cash into growth and safety rather than stockholder return. Like, why pump the stock at this particular point? I see this as a 10x play in the future. Now, I'm not a stockholder at this very moment, but I have 126 grand on the line on this stock. So I'm basically betting that the stock will not go below the $14, $13, $12 level by November. And so I'll be collecting basically almost 2% return on my money with that bet. So I'm selling puts if that's what if you're wondering what I'm doing. Now, I feel pretty confident about that, not just because of the cash backstop, but because of the forward guidance of Vlad and saying how aggressively the company's been growing in Europe. And also US has been growing as well. If you look at all the revenue growth year over year, dating back some time to 2022, September 30th, it's been growing pretty steadily with like 20 to 50% per quarter. That's pretty extreme. And there's a safety on this company that I like, which is that they have minimized their workforce. Vlad's been trying to make the company efficient. Well, I don't know if it's just his call. I just kind of say Vlad as in lieu of management. So management's been trying to be more efficient. They've cut quite a few unnecessary jobs. Their cost and revenue, their operating expenses, peaked in 2021 at like quite a substantial sum. I mean, they were spending at one point $1.5 billion to generate $500 million. So that's really not sustainable. And as a result, many of the banks and rating agencies decided to downgrade Robinhood with a risk of bankruptcy, which is completely understandable. I mean, if you have a company that burns through cash at this rate to generate almost nothing, I mean, that's pretty bad. I knew at the time that was probably the lows. I did make some trades. I made a little bit of money off of it, but not enough, obviously, in retrospect. I just got done selling some puts for about $2,000 over the last earnings call, and hopefully about to make the same play in the next earnings call. Now, obviously, this is not financial advice. You got to do your own diligence, blah, blah, blah. There's risks in the market no matter what you do, et cetera, et cetera. If you don't know what's going on, consult with a professional advisor, but consult anyways with professionals, even if you think you know what's going on, because this game takes a long time to learn. I still haven't learned it fully. I've been in the markets for like 20 years now. I've had a public Robinhood account for almost 9 years. If you're wondering what the progress there, it's up about 480% at the moment. I've had some down years, I've had some up years, I made a lot of mistakes, did a lot of experimentation. So this game is hard. Anyways, if you're just playing around, I wouldn't put all of your net worth in there, put maybe 2-3% of your net worth per trade or something like that, just to experiment. If you don't know what to do with your money, just leave it in like VOO and BND or something like that, where it's safe and set it to compound. But anyways, I don't want to get into that too much. I want to talk more about Robinhood. Things I really like about the company that they're doing too is they are continuing to innovate, and not just innovate, but replace existing industries slowly and try to chip away at themes and things that other people are doing and putting that into the app to where now all of the stuff feeds into itself. I also really like that they're not raising the price. They're not raising the price of Robinhood Gold, which is very valuable to me and to, I'm sure, a lot of other customers. They have so many perks now with this gold membership. I mean, not only are you getting that card soon, but you're also getting $2,000 free margin, right? Basically, you can double pretty safely at today's rates. You can double your gold membership fee per month by putting in an instrument that tracks the 1 to 3 month treasuries. So it's not only free to be a gold member at the moment, it pays you like $5 a month, pre-tax to be a gold member. So this membership is invaluable. And not only is it very valuable for us as customers to the brokerage, but also very valuable to the company, apparently, as Vlad states on the earnings call, that gold members have a significantly higher net worth on Robinhood. They use all of the instruments, they trade more, they're more active on it, they have their Roth IRAs in there, the IRAs in there, their retirement account. So people are like full on if they're gold members. It seems like it's a win-win situation at the moment. They say that the math works out. I feel like they're giving too much benefits for the gold memberships than it's worth. But then again, maybe the locked-in assets, the AUM, the assets under management there. Well, actually, it's not assets under management. It's assets AUC, assets under custody, I guess. The amount of AUCs is worth it for the company. I think that's actually a really good metric as to how much wealth is tied up in your ecosystem. If you look at some of the big bankers, some of the big brokers out there, I think it's a really important metric for them, like Interactive Brokers or E-Trade or other platforms. Charles Schwab emerged not too long ago and really increased their AUC. And it's a big important metric because the more money you have tied up, the more you're going to benefit from the services that you're giving to your customers. You could, collect interest differences. You could offer more things to them. The cost to switch is higher. In fact, because other brokers are not offering a 1% switch benefit, which Robinhood is, I guess that's partially the reason why some of their cash pile is disappearing. But they're basically selling stock, I think, in order to offer that 1%. to new customers and new account transfers. So I guess, I don't know. I mean, they say the math works out. I'm not so sure. I can't do the math myself since I don't have their exact figures, but I can kind of guesstimate what's going on. I'm guessing they're about cash neutral and all that, the benefits they receive from new accounts versus the cost that it's accruing to them. So I can't really speak to that, but what I do know is that the product is great, in my opinion. Numbers show it. The revenue is going up. The net income is going up. Everything's going up. They're being efficient. And I think there's no way, in my humble opinion, and it really is humble, it could be wrong, so please don't listen to any of my advice. Like, you got to do your own due diligence. In my opinion, by next quarter, we're going to show, the company's going to show another good quarter number. Maybe it's not going to beat on revenue, maybe it will, but it's probably going to be in the same ballpark. And I think anything 600 plus, 650 million of revenue plus and a positive earnings is just going to be enough not to drop the stock down below the $14 level, so $14, $13 level. And if it stays elevated, I win. So it's good from my perspective. But I might end up buying some shares anyways, even if it doesn't go all the way down there. If it drops to maybe like $15, I am just a mega bull at that price on the stock. But at over 20 now, it's a little bit, it's still probably undervalued in the long term, but it's a little too rich for me in the short term to try to enter here because most of the easy money has been done. And I'm not about to take on big risks and earn hard money. I want easy money, okay? Things that I can recognize, things that I can put a lot of, a big sum behind because of high degree of confidence. So that's where I'm at. Anyways, please give me that gold card, please. Okay, just like click the link, sign up. Also, let me know what you think about the company. If you have any questions, listen to the earnings call. I've done a lot of research on this company. I've made other videos on it in the past. I've called to buy at the bottoms. Like, I'm pretty familiar with this company right here. So if you have any questions or you think that I'm missing something or I need to eat some more humble pie because things I'm saying are wrong, please let me know down in the comments so I can learn and then we can both profit. It's not a zero-sum game, guys. You and I can both win, okay? We can both profit. All right, that's it for now. Peace.